The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome, traders and traderettes. This is David White, the host of the Power Trading Hour, and we're having a wonderful day here. S&P is up, about 20 and 19 points as we speak now. Volume is very good, almost 2.5 billion shares on the consolidated New York Stock Exchange tape, and we continue to see everybody waiting for the market to pull back an inch so they can buy a mile. But I suspect that we're probably in this lower trading range through Friday's expiration. We'll talk about that a little bit more. Today, April 16th in 1943, in Basel, Switzerland, in the midst of the Second World War, height of the Second World War, Albert Hofmann, a Swiss chemist working at the Sandoz Pharmaceutical Research Laboratory, accidentally consumed LSD-25, a synthetic drug he had created in 1938 and didn't really know what to do with. Went home one day and thought, something really is weird happening. And he says, well, I better take that again. And Mr. Albert Hofmann ended up starting a drug craze. And it's amazing how many stupid things everybody can believe that are great and neat to do. The flavor of the day, the zeitgeist of what people want to do. It just, people continue to do stupid stuff. Everybody says that, or thinks that we're getting smarter as humans, and we just continue to do stupid stuff. There'll be a lot of stupid stuff today. I can see a lot of it that we're doing now. And then we'll look back and go, wow, that was stupid. But probably not as stupid as LSD. That's got to be pretty high up there. Fry your brain on drugs. At least with alcohol, you'll kind of know what you're doing over time. Maybe you could stop before everything goes south. Kind of sneaks up on you. But drugs, I don't know, tend to consume people, or at least the newer synthetic drugs. I'm glad not to have a monkey on my back. The only monkey we have here on our backs today are these bulls. They don't want to give this market up. Like I said, we've got closing on a 2.5 billion shares on the consolidated New York Stock Exchange tape. A little pop in things like gold. And yesterday when you see a huge amount of volume, we got 5.3 billion shares, which is very, very good for a downside in this market, and probably starting to put the fear of God in at least a few traders out here, which is good. But I still don't see a lot of it. Everybody just had to come back, had to start buying this morning, which makes me think every time that they do that, the downside is larger, not smaller. That they just can't get away with it. I remember the dot-com craze. Everybody bought it down and kept buying it all the way down and just getting slaughtered. The Pavlov's dog ringing the bell, the dog has to start salivating, and that's what this market has trained a whole new set of traders to do. There is no possible downside. Bernanke's going to keep that bubble inflated for all of us. And, of course, I'm being a little sarcastic, but I don't think that there's a whole lot there. We're seeing some of the wheat separate from the chaff today. We are going to probably, like I said, probably get down in that 1550, 1560 range for Friday's expiration. So I don't see a lot of upside here. I see probably some back and filling into probably Friday. Monday or Tuesday, we'll probably see the downside in this market resume. We've got a lot of stocks that popped today, which are all in the S&P 500 or all in the Dow. The rest, or a lot of the rest, are not moving at all in comparison in either price or volume. I've got several things short, and maybe if I was trading for the minute, I would have liked to have covered at yesterday's close, but I suspect all my options are into May, and I'm more than willing to sit on them. As far as the bigger stocks out here, we've got Microsoft up 31 cents to $29. We've got Intel up 42 cents to $21.80. And what else do we have? IBM up $2.26 to $211.52. That's still under that 212, and we'll take a look at that. Apple's up $5.04 at $424.88. We continue to see a market that is certainly interesting, as they say, live in interesting times. S&P, we're probably at the full point of maximum resistance, and if we closed above 1575, I might have to actually say that we might have yet one more test at the top. I do not suspect that that's going to happen, at least this week. So what else do we have going on in the marketplace? Looking at gold, up $20, up silver is up 17, almost 18. And what we have in crude, it was down a little bit farther today, but let's see what we got out here. 88.58, it's off about 13 cents. Actually, the number for, what was it? The North Sea crude was off a little bit more today, so some of that's coming back in, but we're going to get into that. So other than that, probably the big numbers today that came out for housings were good, but a very tepid response in comparison to the most of the market, or most of the S&P 500 from those housing stocks. And we'll probably, in fact, let's go ahead and start looking at what those housing stocks are doing. But I suspect we're in some kind of bubble, and at least in a small bubble in the housing market. And I'm looking for a fairly decent retracement, at least in this Tampa area. The reason I say that is over the weekend, we, at least in the neighborhood I'm at, we had a lot of foreclosures over the last 3-6 months. Those houses are just now getting on the marketplace. I have one next door, and they probably had 150 people look at it. One person bought it, supposedly it was going to close on Friday. It had something wrong with it. I think it's back for sale. I saw him out there cutting the grass again today, and I would assume if he would have closed, they wouldn't be out there cutting the grass or spending one more dime on it. So maybe it's going to take a little bit longer for them to close. But it's just interesting that I saw so many people driving around here this weekend. I was out walking the dog, El Diablo. I like to call him Liberace because he's the pianist. But he likes to go out quite a lot. But when I see these people driving around and they stop, I can instantly tell that they are from foreign lands, looking anywhere to dump their dollars. In fact, every single one of them did not speak English as a first language. I probably ran into 4 or 5 people just out walking the dog asking me where these houses were. And I have to tell you, I walk the dog every day, at least probably 4 or 5 times I go out and walk around and have a nice little time myself. But I see a lot what's going on in the neighborhood. I probably know more than I should. But I bump into all the neighbors. I talk to them. And this is different. It was vastly different this weekend. And sometimes it's anecdotal evidence, but I suspect now that everybody's looking that we're probably ready for some kind of pullback. And I suspect that's going to be slightly higher, not vastly higher, but slightly higher rates in houses are coming, mostly because of the tepid response that we got in the market today, and we're going to go right and start looking at some of those stocks. Home Depot is the first one that I want to look at, and if you're really thinking this housing market was going to take off, especially today, you had a down day with fairly decent volume yesterday, spiked a little higher. We have pulled back into that range today, but certainly not a lot of action in this one. D.H. Horton, DHI is the symbol on that one. Actually, this one's getting closer to finding a bottom. the last major low out here was February 25th at $21.35, 6.1 million shares. So we've got, 40 cents? Kind of got close to that, and certainly into that candle today. So we've got a few of these starting to look like they may be making their first bottom. HOV is another one. This one actually broke the lows with higher volume, and we're starting to see some of those actually do that. But we had 10 million shares yesterday as we went across that February 11th low that had 5.8 million shares. It was $5.12 that day on that February 11th low. Spiked through it yesterday on 10 million. Now, we kind of stayed up above it, but again, starting to drift off here later in the day. When we look at Pulte, one of the better ones out here, not, after getting back here a little bit, not a whole lot of difference, from that previous low to this one. About 2 million light. This one's pulled up just a little bit better than the rest of them. But that February 21st low we saw at 1798 with 13 million shares came into it with 11 million shares yesterday. We're still in this trading range. I'm not suggesting that we short the housing market here. I thought that there was a better opportunity about 3 months ago where the volume was lighter on the upswings, and it came back a little stronger, probably the Bernanke put going full hog wild. But we'll continue to look at that. Ryland, as we look at this one, another one that looks like it continues to want to go and at least get down to this previous low that it had. It's pulled back, we're probably going to talk about some big volume moves in this one. Let me see out here. That was the 13th, 900, what do we got here? We've kind of come through those previous downswings. I was looking at the 14th of March out here that had 2.8 million shares. We came into that yesterday, blew through those with 1.7 million shares. So these still aren't showing a lot of weakness. I suspect, though, that we could still find this coming down to the February 21st low, which was $33.50, that had 1.9 million shares. That would just be another attempt to break out that bottom. We're probably going to bounce along for a while, maybe another 2 or 3 months before these things get ready to load up and go one more round out here. What else was there? USG, of course, the drywall company, making a lot of that stuff that goes into new houses. Also seeing a little bit of weakness today and pulling back why the market has been pushing higher. What can you say about it? Well, we are going to be back in just a couple of minutes. S&P up now 17 points, just a little over 2.5 billion shares. So we'll be back in a minute.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzamento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we come back to the show here, seeing just a little bit of the 1570 on the S&P cash volume, fairly low, still under 2.6 billion shares, at least for the show here. Volume good for the day. Just it seemed to kind of take a respite out here. It was pretty good until about 1 o'clock, and it's been kind of quiet since then. I suspect we're probably going to be watching we're probably going to see something like a close around 1565, just a little pullback into the end of the day, and probably see that meander between here and that 1550 maybe for the next couple of days. Then we're probably going to see some real decision-making. I'm seeing a lot of the stocks that had fairly decent pops early in the morning, at least the ones I'm short, starting to show some weakness, and that's a little bit better out here. So as we go through the day and look at these stocks, I wanted to take a first look at Apple. Apple, we had been talking about probably one of the better-looking stocks in the marketplace as far as putting in a bottom. Still does not see a lot of love on these days. People are still using it as an excuse to sell anything they can as new buyers show up. But today so far, we've got, 7.5 million shares so far So fairly another light day out here. When we start seeing volume come back in this, I suspect that we probably ought to get it out of the way in technology. But until we see this actually come in with some kind of bottom and people actually starting to come in and buy this thing with both hands, I suspect we're still going to see some weakness, especially in that technology sector. The weakness in this could still extend down to 390, 395. That would be the completion of a 1-to-1 ABC down. And there's probably a good case to be made for seeing that happen. And kind of washouts that we're seeing in things like gold. Oh, someone said we lost my chart. So we'll try to get it back up here right now. I'm not exactly sure why it did that. There we go. So everybody should have it back again if we talk in the control room. But we've got fairly decent lows in this in Apple. Let's see what we've got here. Got a message coming through. But we'll look at some of those. It's blank. Yeah, I don't know what to say about that. Certainly have it. Maybe we'll get it fixed during the break here. But I've got a that and that. Hopefully someone can see it. But anyway, Apple looking fairly interesting out here, albeit one of those stocks that continues to show weakness. If you're looking at buying some of stocks, probably one of the things that would give me cause is stocks like Valero. That is a VLO for the symbol. And what we've seen is this did break out in a classic formation. That actually happened. And let's see, on the 29th of January, this thing took off like a rocket. Had almost 26 million shares. It's done exactly what you would like it to do. It's pulled back. We started getting lighter volume. Had some heavy volume yesterday, lighter volume today, but it is back at support. And again, you would think that a lot of these stocks like Apple that are making really good patterns should have found some love today. Not finding that love, at least in Valero today. We look at that January 29th pop that had almost 26 million shares. He came into it on April 4th with almost 10 million shares. Little bounce out of it. You came back in. Volume has increased, or did yesterday, for 12 million shares. And you probably are not looking for that. You may need one more bounce out of this thing and then a pullback on lighter volume. And you're probably looking for something like 5 or 6 million shares to finally show that this thing has pulled back significantly and the energy has come out of it. Not a bad pattern, but unfortunately the rest of the energy sector continues to be weak. Any material sectors and any of the energy sectors have shown major weaknesses out here. Anyway, we'll be back in just a couple of minutes following this commercial timeout.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, we're going to look at a few other ones. One that is kind of interesting to me today is CREE. CREE is the symbol for that. Some decent volume out here today as we go back and retest a recent high. The last one was the March 22nd high, $55.66, 1.9 million shares. Getting into that today with 2.1 million shares so far. Of course, we haven't broken that high. Might do it tomorrow. Again, this may be a little bit of a short squeeze, and one of these stocks that is a perennial short, and we'll continue to keep an eye on it. But not a lot of stocks out here really looking at breaking out their highs today. This is one, but I'd be very wary of it. Energy, of course, down was fairly extensive. You'd like it to come up here and test this high, at least on higher volume than we saw yesterday to the downside, but it is wouldn't be one I'm shorting, but is a very interesting stock in that it is one of these few out here at the highs. SAP is another one that we've been watching. This thing's banging along its gap that's banged along 4 times. Nice little pop up here today, but higher volume than the last 2 lows that are just under that $77 level. The first one came in at January 2nd with 1.4 million shares, 1.4 million shares on January 26th. Kind of got into that candle, but decided to come back up. and 1.7 million shares yesterday. You really don't like to see the volume increase on those moves, but when you look at the gap up, this had pretty light volume that these things are hammering away at about twice the volume when those gaps opened up on the 23rd of October. So keep an eye on this. Volume did increase, or energy did increase on the way down compared to the previous moves down. The February 1st high to the February 26th low at $77. The energy was about 70% higher on this last leg down. So SAP getting a little love today, but would be very wary of a lower close or a gap down tomorrow in SAP. Of course, none of those companies in that sector are getting a lot of love. We've seen Oracle disappoint some of the other ones, and we're going to start seeing other companies. I think Intel tonight is after the bell, and that's going to tell us a lot about the rest of this segment. But I suspect all the bad news is pretty much in Intel. People are starting to look forward on it. I still think that we have 1922 on that number back down. I am at home today broadcasting, so if you do want to ask me a question, probably the best thing to do is send me an email at PATH, that is PATH, at tfnn.com, and I'll try to pick those up during the next break and see if I can answer those in the last segment. If you have a question in the den, probably a good time to bring it up also. I'm looking at the stocks out here. We looked at Cree. A lot of these stocks moving out here. Let's take a look at some of the gold stocks. A lot of times when you have huge moves out in the marketplace, it is not uncommon to see what I call and others call exhaustion moves. I think the actual term came from Richard Wyckoff in the 1920s. But the idea is it comes down and washes all the weakest hands out. And at least for a while, there's probably not going to be a great deal of movement out here. We did have a gold pop, but even then, today, when we look at Randgold, people are looking at an excuse to continue, go back and sell it. I suspect that's what we're going to get in the broader markets for the S&P. Let me get back here just a second. Okay. And I wanted to just go back here and look at the S&P real quick. Watching it. 1568.70. So fading just a little bit. I suspect we had about a 10-point bounce coming in the S&P. This is a little bit more. But I don't know. This just everybody has to buy. There's a time to sit back and wait for the market to come to you. Even if you're bullish, and I suspect that if you are bullish, that you want to test of that 1522 area, 1552 area on the S&P cash before you pull the trigger yet again, unless you're just trading intraday and getting out fairly quickly. But anyway, back to Randgold Resources. You had a huge volume day down, 2.1 million shares yesterday. There's probably an 80% chance that thing gets tested, and I mean probably in the next week. So probably being in this right now would be problematic. We didn't get the follow-through day, which makes me suspect that the washout is not over in gold or gold stocks. I was hoping that we'd find some kind of major low in the market this week, but yesterday's move makes me think that we're probably going to see at least a retest of yesterday's low, and it may be, a couple of days to let the dust settle out here. Wanted to look at some other stocks while I was thinking about it. Gap GPS, another one out here testing the highs. I think I've been showing this in the newsletter last couple of days. 3 days ago, it did break the previous high. Did it on about 1.1 million shares light, and that was the October 5th high that came in at $37.85, 5.6 million shares, tested it with 1.1 million shares light with 4.5 million shares. It did go above it. It has closed back above it. A valid sell signal. Energy is not all that bad, so I would think that there's better sectors to be short this marketplace, but there are more out here in the retail space also giving those kind of highs and testing them on lighter volume. Let's see. Let's take a look at WTI. This is one that I thought fairly interesting, but not a real good signal, but at least one of those that the volume didn't come in unmercifully yesterday. This swing has blown through the lows, but I'd be, this is not one that I'd be afraid of. It looks like we have W&T offshore in the energy sector, that $13.18 low from June 25th of last year at 720,000 shares. We had a lot of volume going through that yesterday, and we have a lower low up here. But if this thing could work its way out, the volume kind of retest, get back above 13.18, this one might be a very interesting trade that you've got since the last major move would be take you back up to the 15s and then possibly up to the 18 level. And you'd need probably a real disruption in crude. I suspect that crude itself is moving back to some lows, and that low probably would be around the $66 range. It may take a while to get back down there as we continue hammering around at these lows. But the exodus out of commodities, especially spurred by the numbers by China, don't look like it's going to turn around anytime soon. So probably $66, $68 would be enough to cut production in some areas where the crude is expensive to get out of the ground. That would be enough to put a floor in crude for a while. But it may take until September for us to get there. I don't think that there's a lot of upside in crude, maybe $95, $96. And I think we're probably going to have one of the most volatile movements in at least these commodities for probably through the rest of the summer. So we'll be taking a look at that. Anyway, wanted to get back to some of the other stocks that I follow and see how they are doing today, at least in the charts. Expedia has had some selling come in. Not Expedia. Was it Expedia? EXP. EXP, is that right? Expedia? Yeah, Expedia. It's been at this higher range. It got up to $68.09 on February 5th. Since then, we've had a lot of consolidation. You didn't have a bad buy signal out here in Expedia, and we're going to come back to this level, which is why I find it interesting. This is probably not a bad trade from $60 to $68 if it comes back on light volume. First time it did, but you had two major highs on August 7th that had 4.8 million shares at $59.50. You got into $60.29 on September 21st with 5.9 million shares. Your low at $59.50 on March 28th, though, came in just at 2.7 million shares. So you had a nice little bounce out of that. We're slowly working our way back out here. But let me go to just a shorter time frame here so we can see these moves. Not a bad place to start looking at being long in that $60 area if a volume remains light. One of the things I like is you did have a big candle in Expedia yesterday, and the volume really didn't accelerate so much. So there are a few bright spots out here in the tech area, Expedia being one of them. I suspect that part of that has to do with a lot of noise and market talk, which brings me to a stock which I had some questions in the emails last night, and that is Netflix. We were talking about one day this being the holy grail of all shorts, but that they sent some no-name companies or very unwell-known companies out to push the stock yesterday in the worst part of the pullback. And it basically came in and sold it anyway yesterday, and pretty much flat again today. I suspect that there are huge amounts of shorts in this stock. We're probably going to get a better read on it here in a few days when we get the mid-month numbers in for short interest. But this is if you've ever read Reminiscence of a Stock Operator, this is an excellent example of how operators get in and move a stock. Also, without a lot of actual details of how much money this company is going to make. Most of this bounce that happened from the 56s up to here, a combination of two things. One, Carl Icahn stepping in and buying huge amounts in that $60, $65 area. The second is a concerted movement to portray this company as the all, be-all, and tell-all of online streaming. I've always worried about a company that had such low barriers to entry. If you're CBS, you can open up your own website tomorrow, and you can start charging to watch The Mentalist from Sunday night because they delayed it, and I didn't get to TiVo it, which made me incredibly mad. But is there an easy way to go back and find The Mentalist, because they put that horrible show in there right in front of it, and it always preempts it by about 45 minutes, so I get stuck watching it for about 5 minutes, and that's The Bad Wife. They actually call it The Good Wife, but I think it's The Bad Wife because it interrupts my Mentalist viewing on Monday when I go back to watch it. But one of the things is, how tough is it actually get in the same business? You buy a bunch of servers, you write a little bit of software. It's mostly about getting the content. And as long as you have other people out there bidding for that same content, it's not going to be cheap, and there isn't going to be a lot of scraps left out on the table for somebody like Netflix. They won't tell you how much money they spent to get the Walt Disney library and all of that Disney content. Makes me think that it's going to be an enormous sum that they may not be able to pay out. They are also spending about $5 or $6 million an episode for House of Cards. And when you get, a million or two people, a million or two watching them, your economies of scale aren't any better than what you see at HBO or Showtime. And certainly, I haven't watched it, but I hear it's fine. The real thing is, how many duds are you going to have while you make your own content? Are you a delivery company or are you a content company? And it sounds to me like the business plan in this has changed from a delivery company, because anybody can do it, to a content company. It would be very interesting to see how this plays out, but my suspicion is this is going to be very much like Apple played out. That is, we're going to see margins continue to slowly drop, and eventually this thing is going to snap, and it's going to be back to $50 to $57, $58 range, which is probably the right valuation for a stock that you have no idea how much they're paying for content. Anyway, we'll take a look at this a little bit more in the charts when we get back. And again, email me at pat@tfnn.com if you want to look at a stock in this last segment.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we come back, I wanted to talk a little bit. We were looking at Netflix, and this brings up a very interesting part of science called game theory. And the question is always, as far as I can apply it, is called the prisoner's dilemma. But someone posted something in the den about the finance ministers not wanting Japan to get into competitive devaluation of their currency. And we've had a fairly concerted effort where everybody's agreed, at least for the most part, in how to devalue their currencies together. So there's been a huge move in the dollar or yen or some of the other movements in that. And in fact, let me go back here and do that. And we got the dollar off, 69.70 cents today at 81.81. You would think that there was every indication that the dollar index wanted to go out and break 84. I suspect that we're probably seeing some little mischief out here by our Fed to make sure that that does not happen. But on the side of the people in how can I say this in world of banking, they get into the thing called the prisoner's dilemma. The idea is a kind of a mind experiment. But if two guys get hauled in by the cops, and both of them stay silent, don't say a word, then they're both going to walk because the cops really don't have enough evidence against them. But if one of them breaks, they offer the first one that breaks 5 years. The second one that doesn't tell them everything gets 10 years. The idea is, do you rat out your buddy, or can you afford to stay with the plan, which is to say nothing? If you, both of you say nothing, neither one of you going to jail. But a lot of times you don't know on the other side how much the cops actually have against you, whether they can put you in jail or not. Probably a good reason to always hire an attorney, because they'll figure it out before they do that. But the idea is whoever bites first gets half the sentence that the other guy has. But that's kind of the problem that people are in. There is a page on the whole issue called The Prisoner's Dilemma, and I'm showing it on the in Tiger TV right now. I would really start looking at it because it's a good way to think about not only how markets hit highs and lows, it is where people start selling. So if you're, let's say that you've been in Netflix for a while, you wrote it all up, and the question is, how long can you get people to hold it while you're selling it? If you're Carl Icahn, you want to be peddling this thing out. You've made 3-4 times your money on this thing, and probably 3 times your money on this thing, from $60 to $180. How do you keep this thing up? And when we talked about these bogus upgrades that we saw yesterday on Netflix, and you continue to make sure that no one talks about the cost of your content, how much money that is going to be in Disney, and keep on telling everybody that your subscription rates are going to the moon, and eventually, you get enough people to sit down and buy a few shares of Netflix at the high level, and then eventually the truth will come out. Now, I can't guarantee you that Netflix is going down, but this has every indication of a huge operation in the marketplace. Anyway, we'll be back tomorrow. You can always catch me same bat channel, same bat time, 2 to 3 Eastern, for the Power Trading Hour. See you tomorrow.